have to monetize this mofo. Let's see. YouTube. That's Mary Daly. She's a Fed governor, I think. President. Yeah, she's in charge of the San Francisco Fed.
She looks really, she's powerful.
Mm-hmm. YouTube Studio. Okay, I got the alert that I am.
And still straight.
Oh, I need to bring up. I hope MicroStrategy shows up as.
Her nails are black.
Let's see, live, and then on. Okay. Boom. Morning, Joe. I'm gonna close that down. What let's see if Earnings Hub. We'll go over the Nike earnings yesterday. Absolute disaster. Are there any earnings next week? Nothing really. Mullen reports next week. Morning, Chris. Okay, let me pull it up on here. For all dog lovers, Penny found a turtle this morning. She didn't kill it, which is good news. Video play soon. Ooh, I get 2 ads. Okay. Let's do some scan. I don't even know what I got today. Morning, Scott. Scans. I bought Amazon yesterday, by the way. I think I might get rid of this cord. Yeah, the keyboard's at 28%. Whoa. I'll do that later. I'll charge it later. Let's go to the scanner. I was shocked, by the way. I guess one subscriber actually had some problems, and I talked with the scanner, and I talked to TrendSpider about it. They can't see squat, so they're so concerned with privacy. They can't see my strategies. Unless I share them, they can't see my scanners. They can't see anything. It's crazy. AMD. I'm not going to include QCLN. That's one that I want to get rid of, and I should have gotten rid of it up here at 37, but it's only at 35. I do have to get rid of that one. Oh, no. Oh. Jesus. Are you on mobile? That's a nightmare. I can survive without the TV. I don't think I can survive without data. I did go 3 days here without power. I had mobile data, but the mobile data sucks, and I was able to just drive over to the I literally, in my Tesla, I would go to the Braves stadium, which has free Wi-Fi, and I'd have my laptop, and I traded and worked in the car with the dogs, which was great. I mean, you know, if you have a Tesla and you just leave the climate on, you're not wearing down your battery. There's a lot of green on that core portfolio. But that sounds horrible, Chris. Hopefully. He said lightning storm took out his modem, his router, and all of the hardwired access points. So he's got no network. That sounds bad. AETH. BITO gets a cross up. BITW. Although Peter Thiel said yesterday, he doesn't expect Bitcoin to move much from here. This is an interesting one because BITO, IBIT is the one that I think is the biggest one. And it's down, again, the 200 days moving down. Do you have confirmation? No. Now, MicroStrategy, which is interesting. MicroStrategy got a buy yesterday in the algorithm. And I don't know why it's, let me see. Is it on, it is on Bitcoin. Hold on. Okay, we did Bitcoin. Let's see. Where's my 4 hour? Yeah. Oh, it got it the other day. I'm going to put it in here. MSTR. Thank goodness for Amazon. And UPS and FedEx. And, okay, so we did Bitcoin. We did the core. We'll do covered call ETFs. Hey, Mike. Chris, that sounds like a 3-day weekend is needed. Don't trade today. Too much stress. Call ETFs. QQQX. QQQY. RYLD. JEPQ. That's interesting. Energy names. TQQQ and SOXL. In fact, I'll do that after this, because I do want to look at Arch. I want to look at an ETF like SOXX versus Apple or Amazon. Let's look at that stuff. Okay. ETFs, MAGX, MAGS, UMDD, FNGU. Mice had a problem. Tesla had a problem with mice. They use this soy-based product for their wiring harnesses, I think it was, or wiring kind of insulation. And so mice were really eating it, and it was causing this huge problem with Tesla. At first, they had to switch away from it. Oh, look at this. CLS, SHOP, we have. ETH, we have. AMD, DEC, Mara. Mara's up there. BITO is up there. Zscaler, DocN, ANET, ELF. Let's see. Wow, that's a big amount on the watch list that just kind of crossed up. CLS is one that, yeah, just buy it. Yeah. Yeah, I think, it's why cars are hard, man. It's just, I don't know how you even sell a car for $40,000 and make money, to be honest with you. There's some funny math going on, especially with dealers and stuff. BIIB, Dexcom, Fortinet, Zscaler, and AMD. Wow. Okay, let me do this. And then we're going to go to the S&P. AMD EMR. Okay, we've got our scans done. So, yes. And then we'll scroll down to the 4 hour. I need a fan in here. It gets hot in here. Oh, you have a fan?
Yeah, I thought so, but
Is it in East Point? I figure it's Timu. You can find me something, right? Okay, I'm going to go over Seeking Alpha because what I want to do is look at SOXX because I really want to do this charting. And we're going to do select metrics, and I'm going to do performance, total return, and update chart.
you can take off shorts.
Huh?
You can take off
I ain't taking off my shirt. No, ma'am. No, ma'am. I ain't taking off my shirt. As hot as I am, you ain't seeing. It's the Seinfeld episode. How do you know, that sex is actually happening? It's when the nipple makes an appearance. So I will not show my nipples. Let's see. Apple and Amazon and Microsoft and Meta and you know what? I'm not going to do NVIDIA because NVIDIA is included in SOXX. That's probably a good, yeah. Because what I really want to show is year to date. I mean, you can see Meta's just killing it. But SOXX, let's see, 5-year. SOXX is actually performing better than Microsoft over 5 years, than Meta over 5 years, than Amazon over 5 years. That's probably a pretty, you know what? I'm going to include this. Copy link. Let me see if the link works out. Yes. Okay. That's what I want to show. Okay, where am I going to put this? Roaring Kitty with Chewy, City Makes Apple, NVIDIA, SMCI. Owning just a stock sector is better. Look at SOXX over 5 years, beating Amazon, Microsoft, and Meta. Boom. Put that up. $20 is $20. That's a good one. That's a good chart. I like that chart. Okay. Is that the last? No. Okay. I'm going to move that around. I've got to open up top 5 mining stocks. You know what? Where's the TrendSpider pricing? Because we have updated pricing. Because the July 4th special has come out for Hot Penny. July 4th pricing is out, and it's unbelievable. I mean, the enhanced is just, killer. And the pre-sale expires in 2 days. So there's not, the dollar amount, what is it, $20-$30 that they saved you off the standard, but the big one is the enhanced. You're paying now the enhanced what you were paying for the standard, which is unbelievable. 6 months free plus 47% off. That's crazy. And this one at $78, less than $1,000, and you have unlimited one-on-one training. That's crazy good. Crazy good. So we'll talk about that one. I do have an updated offer. If anybody's on here and you haven't signed up for Seeking Alpha, I'll include a special link in the newsletter, I think. I don't know. I'm debating about it. What they did was Seeking Alpha put together this July 4th offer, and I'm not sure exactly how I feel about it because it's Alpha Picks with 1 month free of Seeking Alpha Premium. And I don't know that that's... I mean, just get both if you're going to get both. Sign up separately for them. That would be my take on it. So I haven't decided if I'm going to promote that or not. I kind of, probably should, but... Okay, so we got the top 5 mining stocks. Then we've got, you want to know why I hate airlines? This is a great Instagram post about why I hate airlines. This is fantastic. And everybody should watch it. There we go. That one's over there. Super Micro. NVIDIA. Apple. Then we're going to talk about Chewy and Wolf. Oh no, what is that? That's not what I wanted. Hold on. Let's see. Oh, Chewy. This is what I wanted. Chewy and Woof. Okay. And then we'll go over here. Because this is the actual post and unusual whale spotted crazy options. Oh, I have that one open already. Okay. And top bull markets in history. This was interesting. This was super, super interesting. I'm going to post this one again. This is the famous one. We'll post. The markets were clear. These were the strong stocks. Yes. This is Gunjan. She's great. And it's official. I'm a top 50. By the way, thank you, everyone. Good morning, Laurel. Thank you, everyone. I am a top 50 podcast worldwide. Woo-woo! Worldwide top 50 business podcasts. I'm pretty sure, and this is what I always tell people, that podcast gets more listens than any YouTube, any newsletter. If everybody that was actually listening to me on podcast signed up for the newsletter, signed up for all of the other stuff, I mean, that'd be crazy, crazy good. But because the podcast was what I started first, it's the biggest one. It's been growing significantly. And it's nuts. It's crazy. I mean, it's way more than I could ever thought people would listen to me. I'll go into it when I'm on the podcast. But let me see if there's anything here that kind of catches my eye. Oh, Airbnb. They're still selling Dell. I mean, once all of the Dell insider transactions stop, I mean, this stock is going to take off. Because once that selling pressure gets off of it, God, I can't imagine. Did you use your hands or did you use the tool? Oh, you used the tool. Just so you know, there is somebody in the room with me, and she was just shedding Penny. Miss Penny is a hairball. Fucking Penny. I love you. I love you. I love you. Okay. I should put where's the hold on, I'm gonna seeking alpha. Where is the inflation data coming in? I know it came in fine. Nokia NFL Sunday ticket. There we go. This is just and fine. Penny found a turtle, by the way. If I didn't say that, Penny found a turtle. She is all kinds of riled up now. Okay. Ooh. Somebody's getting sod delivered. I wonder if they could have some left over for me. Okay, hit the thumbs up button. I'm going to hit record now. Hey, Maya? Yeah. It's 9:12. Yeah. Didn't you have a 9 o'clock? 10. Oh, okay, 10. Sorry. I'm going to hit record now. And we're going to get going. Because I do have a lot of thank yous. And then the podcast is going to be special today. It's going to be special. I guarantee it's going to be special. Let me just make sure I've got Seeking Alpha 20% off. I've got Alpha Picks. We got the top 5 mining stocks. We've got TrendSpider, limited sale time. We've got the link tree up. I've got the newsletter up. We've got Mullen next week. There's not a whole lot of earnings. I actually want to pull up Nike to show how bad it was. And that's really good, by the way, earnings per share, but you can manipulate earnings per share however you want. It was the guidance. I mean, to make no mistake, it was the effing guidance that this one was just a nightmare. Okay. Bank of America's up 1%. I think the financials are doing well because Goldman Sachs is up 1% too. Tesla's up 1%. We're hitting the 200. Taiwan Semi at 173 up 1%. Walmart is up 0.12. Don't sleep on Walmart. I will tell you, do not sleep on Walmart. I know it doesn't have super amounts of strength, but this needs to be in your portfolio. It is just such a great. And VOO, by the way, declared a dividend. If anybody's cares or has VOO, they declared a dividend. They'll pay it out. It's just kind of I didn't include it because it's just kind of common. Let's go to the videotape. Okay. Good morning. It is Friday, June 28th. I want to say first off, my name's Gary. I'm twice vaxxed. My pronouns are they, them. My golf handicap has never gotten below a 10. It's never gotten below a 10. I'm a guy who shot 78 at Sawgrass one time, mostly in the 80s. Played it about 5 times because I lived in that area, but I shot 78 one time at Sawgrass. I also shot 79 at Pinehurst number 2. Both back in 2005. I was on my game then. But I never got below a 10 handicap. To hear these fools last night arguing about the handicap and that Biden's a 6 handicap and Trump is like a 5, no freaking way. None. Absolutely none. So we're not going to talk about the debate. By the way, just to tell you how important that debate was last night to the market's up in pre-market. That was a disaster for our country. but the markets are up. So just don't get yourself all wound up in a ball and get we're not taking fiber this morning in order to unblock our blockages. So, but yeah, it is what it is. I just wanted to say I probably could beat both those guys. I haven't played golf in 3 or 5 years. I could probably beat both of them. Maybe Trump. I can't. I know I could beat Biden. Just so you guys know, well, let's start out with this. I have a huge thank you to give out to absolutely everyone. Spotify notified me yesterday that I am number 49 in June for the top business podcasts. It is enormously humbling for me to absolutely be that high. And I say it a lot. I don't understand how in the world so many people listen to me. And the podcast is incredibly popular. Nobody listens to me on YouTube. I got 100 people that join me every morning about that. I love them to death, love the interaction. But the podcast gets the large amount of listening. The views of the newsletter, if as many people subscribe to the newsletter that listen to me, I'd be a much wealthier man than I am today. But the podcast, hey, thank you everyone for listening to me on the journey. It's been 3 years now. I knew I was top 100. I mean, they always send me, hey, you're top 100. That's no big deal. But top 50, I'm beating some of your favorites on Spotify, on CNBC, Fox Business. And listen, let's be honest. I'm no Jim Cramer. But yeah, thank you, everyone. Now let's talk about the markets. Headline: core inflation came in. It makes easing. So personal consumption price index 0% versus 0% consensus. On a year-over-year basis, the PCE index advanced 2.6 versus 2.6 expected. The Fed has engineered a good landing. Not everything's perfect. Our growth still in question. But things are going well. We're going to have at least one rate cut, if not two. I would argue they should be doing a quarter point. A quarter point means nothing today. It's just symbolic. With Canada and Europe easing, I would argue they should do a quarter point, and that would boost the market. And we've always talked about July being 100%. That could be the rocket ship that sends us higher. Look at the Qs right now. This is the last trading day in June. Okay, July starts a Monday. So you want to get yourself set up. I've talked about this before. July is 100%. Do you want to wait till Monday? Yes. I would argue if you haven't bought stuff, then absolutely just wait until Monday to buy stuff. But today could be a good day. I'm seeing a lot of green. And where are we on the Qs? I know I've talked about how it's a little bit, hey, we're at this point. I'm seeing a button hook. I'm seeing the Bollinger Band cinch up, okay? That typically means you're going for a ride somewhere. Where are you going for a ride? Well, over the 9-day, looks like we're going up. Look at the MACD. Looks like it's going to cross up on the strike line, which is pointing down. The one thing that's concerning is the RSI is at 63. 63. So let's go look at the weekly on the Qs, okay? You've got a couple of times where you've bounced up here, and this one, you're seeing a little bit of a button hook. The RSI is at 71. The MACD is already crossed up. Could we go higher? Yes. That's just it. I mean, you could go higher. But the reality of the situation is nobody knows where it's going. You have to take a look at the data. You have to take a look at some of the historical facts. And again, the last 16 years, July is 100% win rate on the Qs. How are you going to play it? I would argue you want to buy TQQ. Do you want to buy it today? Let's take a look at the chart and see. Is TQQQ as strong as QQQ? It could be even stronger. Here on the 4-hour algorithm, the algorithm got you in at 67. 67. The average win on TQQQ with the 4-hour algorithm is 17%. 17%. You're at 11%. I'd argue at 17%, are we going to see upside of another 5 or 6%? Maybe. Again, you want to take a look at this. Now, if you were just trading this on the 4-hour algorithm, you'd have this nice buy-in here in April at 53. You would have gotten a nice 15% gain. And then you bought back in at 64. You could have bought back in down here at 60. And now you're at 74. And again, that's just 2 months. How do you get the 4-hour algorithm? Well, you go over to Linktree, and we've got a special July 4th offer. And this is incredible. I will go over these 3 offers that they have, okay? If you're just getting into technical trading and you just want some type of chart stuff, the standard is your goal at $49 a month. That's a fantastic offer. I will send you the 4-hour algorithm. I will send you the 65-minute, the 5-minute algorithm, all of my watch lists and scans. Continue watching this episode because you'll see exactly how I use it. And the 4-hour algorithm is a powerful tool for me to take emotions out of my trades and understand exactly where the charts are telling me that things are going. Now, the enhanced version is $52. Again, that's $3 a month more. You get 6 months plus 47% off. That is huge, huge, $52 a month. What do you get additional? Well, you get 10 active windows. You get 100 alerts rather than just 30. You get 90 days instead of 30 days. You get 30 simultaneous trading bots versus 5 trading bots. So again, the enhanced is significantly better. Now, if you're brand new and say you just want to learn charting and you want to do this stuff, if you have the money for this, $78 a month, and again, it depends on the amount of money that you're trading, but I would argue this advanced tier for $938 for the year. What do you get with this? Well, you get a ton more than you get with either one of these. But the key point for me would be this unlimited one-on-one training, priority email, chat, and phone support. You get the email and chat support over here for standard enhanced. It's best in class. I mean, I have never had a problem. I think I'm standard. I may be enhanced, but I'm not sure which one I'm at. I'm not on this advanced. They don't give me the advanced. Yes, I'm an affiliate, but I don't get the advanced. I don't get any more benefit than these guys at standard or enhanced. But this advanced tool, unlimited one-on-one training, that's huge. This sale goes on for 2 more days. Again, you have to sign up over this weekend. It will progressively get more expensive. So while I don't do podcasts, these prices may change. So if you're seeing this and hearing this and you want to sign up for TrendSpider, do it today. You'll see how I use it. Continue listening because you'll see exactly how I use it. But again, this is the July 4th sale, and they've told me it progressively gets more expensive over the weekend. So today, if you think you're going to sign up, you're going to spend more tomorrow. That's essentially what it is. You're going to spend more tomorrow. So why not do it today? That's it. Again, that's the sale going on. Let's go and let's look at how I use this stuff. Now, this is what, last year, everybody was saying at the beginning of this year that, hey, the Mag 7, of the Mag 7, you have 493 others. Hold on one second. Penny, I love you, but get down. Okay. The Mag 7, the 493 others in the S&P, they said that the market was going to broaden out. Well, when you look at it, it hasn't broadened out. My point is, don't listen to douches on the internet. You want to look at your charts. You want to look at your fundamentals as guiding your portfolio, but you want to take emotion out of this. And when somebody tells you, hey, it's going to expand, don't listen to them unless the charts tell you, yes, that's it. When Tom Lee says that the Russell's going to end the year at 50% up at 3,000, you want to look at the charts and you want to see, are the charts telling me that? The charts aren't telling me that. So, again, I say the top 5 yesterday, I said Apple, Nvidia, Amazon, Microsoft, Meta, Google, Tesla, Netflix, whatever you're investing in. My particular portfolio is Apple, Amazon, Microsoft, and Google. I mean, that's the top holdings in my portfolio. I want to get more Nvidia. So I put out a plan in my newsletter how I'm going to get more Nvidia, what I'm going to sell, what I'm going to buy, when I'm going to buy. But this chart shows you the S&P has outpaced its equal weight version, which is less reliant on heavyweights like Nvidia and Microsoft, by 11 percentage points this year, on pace for the largest outperformance through June of any year since at least 1990. That's what this shows you. It is huge. So we're outperforming. And when I say don't listen to a douche on the internet, watch this clip. I'll include this in the newsletter. This is the famous clip of this dude, obviously, making a trade with Upwork. I think Upstart was the big thing in 2020. That was hey, we're putting AI into loans. Well, Upstart is worth nothing. Honestly, it's the worst investment you could make. But it was trading for 40 or 50% in a day. You could make that in 2020. It just had this kind of mystique about it. Well, this guy goes on CNBC and he says, yeah, Upstart, great company. We're investing in it, blah, blah, blah. They've had huge growth rates. And then the announcer asks him, what do they do? And the dude says, oh, I'm sorry, I can't hear you. Watch it. It is just the quintessential do not listen to a douche on the internet clip you can ever see. So what I want to point out here is we're in a bull market, and I say this all the time that we're in a bull market. This is a chart of the three greatest lifts in the history. So this is the S&P 500 index, okay? The yellow line here is between 1924 and 1929. That was before the crash, okay? 1929 came the crash. That's it. This is the run up before. That's the yellow line. The blue line is 1995 to 2000. This is the dot bomb. So after 2000, everything crashed. The S&P in 1963 through 1968 is the green line down here. Again, that was the crash of the 70s, okay? This pink line is the S&P between 2019 and 2024. Do not tell me we're about to blow up because we're in the 2000s. The 2000s is this blue line. Look at the difference between the two. We are in a bull market until we're not. And that's the point. I don't think that we've extended this thing too much. I don't think that we're way above our skis. No. Now, this was super interesting. I saw this on yesterday. Unusual Whales posted this. They noticed a couple of strange options on Chewy and Wolf. Chewy in particular, I think it was. This one, huge. What's going on with Chewy? Well, then you get a meme of from Roaring Kitty. That's it. That Chewy was up 11.25%. Wolf was up 3.75%. Again, these are trades. I don't think Chewy's got a great business. I ordered from them recently. I absolutely loved it, but it's come back down to reality. These were actually trades. It's come back to reality. Ironically, effing Kramer said, hey, on Tuesday, he said, buy Chewy. Honestly, I don't get it. And he told his members yesterday, sell. Great trade, Jim Cramer. I mean, great trade. I don't know if Roaring Kitty is doing anything, but he's back out there. This is an interesting one. Apple has gotten a ton of upgrades. A ton. Citi made Apple their top pick in their price target. Apple's iPhone shipments in China surged 40% in May amid discount offers. Here's the way you want to play Apple, and I've said this before. Apple, this candle that goes to the all-time high, that's the new resistance. I think it's around 220. Let's say 220 is the high. So 220 is where it ran up to. That's where you're playing this one. If you're buying at 215, you've got to expect resistance at 220. Now, where's your support? It's 200. So you're a little bit higher than the mid-level. Am I buying here? I'm looking at the chart. The chart here tells me what to do. Now, if you listen to the 4-hour algorithm, you got in here April 25th at 169. This is a legendary run for this stock. This is 63 days, okay? Almost 27%, almost 30%. And you could have gotten out with 30%. Hold on one second. Penny, I love you. Okay, she found a turtle. So she's all riled up this morning. But you can see this legendary run. Do you want to buy it here? I would argue if you are investing for long term, absolutely yes. If you are investing for the next 5 months, I would say you want to wait for a little bit lower. And that's not to say that I think it's going to absolutely crash here. I think 200 is your support level. 5 years from now, do you care about this $15 that you missed? No. Now, if it goes up to 220 and we use that 220 as support, you want to start adding there. Use your stop losses if you're trying to trade it. But I wouldn't trade Apple. It just doesn't have the volatility that you need. And to give you an example, yesterday, I bought Amazon at 198. I bought a really big lot of Amazon at 198. Now, I'm not going to make that public. I'm not going to put that in the title. I'm not even going to put that in the newsletter. It's on Savvy Trader, but I bought it yesterday. Am I upset that it's now at 196 and it's down today? No. It was replacing I sold a bunch at 176 and I bought back at 198. I will buy more. I just bought it. I didn't want it going over 200. I said, you know what? At some point in time, this is going to go over 200. We've had a long enough period here of a couple of days where we're going to trade over 200 that I am fairly confident that this 188 is now support level. And I would even argue that 190 is support at 188. I mean, it's $2. Who cares? Okay. You look at Apple, their stuff's rising. If we look at the fundamentals of Apple, there's a little bit of the valuation and growth that's in question. I would argue the next quarter for Apple is going to be a key, and it's specifically on growth. If they can't grow revenues year over year, this stock is being propped up essentially by buybacks. And that revenue growth with the iPhone cycle coming up, everybody's hyping this up. If that doesn't come to fruition, we're in trouble here. I personally am in trouble. Am I worried about it going back down to 150? No. I mean, this dude who says it's a bubble faces massive hurdles in the AI race, euphoria, all these sells. I don't think it's a bad thing. The valuation is a bit crazy. Remember, we talk about the PEG ratio a lot. The PEG ratio includes price per PE and growth. That's a little high. I mean, it's super, super high. It's an expensive stock, but you're paying for best in breed. Am I selling it? No. Am I adding more? No. When the dividend comes around, I'll add more because I just reinvest my dividends. That's it. Now, NVIDIA received a plethora of price target hikes despite recent volatility. This is one, they're up 0.44. It's setting up nicely. This is setting up for another move higher because I don't think that this particular stock has a valuation problem. And the issue is that it's priced for absolute perfection. That's the real issue here. This is priced for absolute perfection. Now, if you're listening to the algorithm, you're sitting there and you got out yesterday with a nice 47% gain. I mean, that's a nice, I would argue you do not want to get out of that one. But if you got in on April 26th at 83, and remember, that was 830, and it kept having this problem where it couldn't get over 1,000. All of a sudden, pre-split, this is now a $1,200 stock. Even though it's trading for 122, pre-split, that was $1,200. Look at how precisely it's using that last up here, that last support level where it had resistance. It's now using it as support. And it's been using it since earlier this week on the 25th. That is using support. I would argue if you do not have exposure to this, get exposure to it. Look at how the MACD came down. Look at all of that. I am going to add to this when the algorithm tells me to add to it. I may try and time it even around this 122. Do I want to buy on a Friday? No, we've got a holiday coming up next week. July 4th, I think, is Thursday. But we've got a holiday coming up. So you want to be prepared for next week maybe not being able to trade this one. Who knows? Maybe Taiwan gets invaded this weekend. You don't want to buy this on a Friday. It's not that high up that you want to chase it. But again, the chart is telling me that between 115 and 122 is where you want to add this if we continue to see some resistance. If we go over here to Seeking Alpha and we look at this one, it's a hold in the quant, but it's a strong buy from Wall Street. And what's the average price target from Wall Street? 131. That's a 6% upside. Now, mind you, the valuation is crazy here at 123. It's even crazier at 131. But I would argue that this one is worth it. It is just a stock that you want to sit there and hold. You don't want to, trade out of this one. You want exposure to it. Make sure that you have exposure to it. Another one that I really like, SMCI. And if we look at SMCI, 385% boost in CapEx to maintain above trend growth. They are spending a ton of money. A ton of money. They're going to spend money. They have to grow. SMCI, I've said it before, I think they're setting up for the next leg higher. The actual valuation is not crazy. You've been trading between 800 and 900 here. Have I added to it? No, the algorithm got you out with a nice 6% gain. Hasn't gotten you back in. Probably will get you back in either in the morning candle or the afternoon candle, depending how it trades. Right now, you're down 1%. But I would argue you want to add to this one because if we look at the weekly on this, if we just go and look at the weekly chart, again, you have to look at these charts. What did we do here? We traded sideways for 4 months. 4 months. Where did this sideways trade come? April, May, and now June. We're heading into July and August. How does this trade in July and August? Well, in July, it's one of their best months in the last 16 years. The best months are November and December. But this one at 63 is only trailed by 71% in January. I would argue that you want to add it during this August, September, October timeframe when it hasn't had great seasonal capability. Look at the mean, the blue line right here. Mean change in July, 3%. I would argue this one is one that you want to just buy and hold as well. I buy and hold it. If we go and we look at the quant has moved this one to a hold. And the reason it's a hold, we can go and look at the quant. It's the valuation and profitability. Now, when did it move to a hold? It moved to a hold at 843. It's trading at 880 right now. And if you want to look at the quant, you can see this quant. It's been a strong buy for a long, long time. The profitability is where it went down. And it was this margin. The margin is where it went down. That's it. And this levered free cash flow, they're spending a lot of money to grow. If we go and look at the growth, how are they growing? 79% revenue year over year. They did dilute, shareholders a little while ago. But do I think it's crazy? No. And which one do you want? Do you want SMCI, Dell, or HPE? I would argue that HPE probably has the biggest growth. And I would also argue that Dell is a huge behemoth of a company when it sells these servers, and that they are probably going to benefit tremendously more. The problem with Dell is when you look at the profitability and it's their margin, it's a D. And that 23%, that's huge. Remember, SMCI was like 15 or 18%. I forget which one it was. But again, Dell, that's where they're going to come down because they've always had huge margins. And so the street is going to ding them on that. Now, where's Wall Street say that Dell should be trading? Their average price target is 157. That's a 12% upgrade. 12% upside. SMCI for Wall Street, SMCI, the Wall Street price target, 1,032%. That's a 16% upside. So you've got an opportunity here to get into one of these other AAI names other than NVIDIA where you can do it. Now, thing that I wanted to show you too, if you think owning just a stock rather than a sector is better, look at the SOXX. This is the iShares Semiconductor ETF, okay? Over 5 years. This is an ETF. We can go look at the holdings after this. But this is what I wanted to show you is this chart, okay? Apple is outperforming it at 344%, okay? Let me just move that over here. I'll do this. Then the next line is orange. That's SOXX at 288%. Your next one is Microsoft at 253%. This is 5 years. Your next one is Meta at 174%. And your next one is Amazon at 177%. SOXX, the semiconductor industry ETF, has beaten Amazon, Microsoft, and Meta. Okay, the only one it hasn't beaten over 5 years, and it came damn close, is Apple. So again, make sure you understand that ETFs are a good route if you don't want single stock exposure. It's not a horrible thing to get VOO, to get QQQ, to get SOXX, to get XLK, to get XLY, XLE, any of those names. If you don't want single stock exposure and the volatility, SOXX has outperformed other high-flying stocks. And that's what I wanted to point out to you. One thing that I saw yesterday that was interesting, and I'll include the 4 names that Josh Brown, they were going over Q2 review of portfolios on the lunchtime for CNBC. And what was interesting was, oh, by the way, let's go to the holdings of SOXX before I forget. Because look, the number one isn't even NVIDIA, it's Broadcom. Number 2 is NVIDIA. Number 3 is AMD, Applied Materials, Qualcomm, Lam Research, Micron, KLA, Taiwan Semi, Monolithic Power. It has 35 names in it. But what I wanted to show you was, again, Josh Brown's review. The judge kind of said, hey, Josh Brown, you have Matterport. Matterport is up 77% in the second quarter. And Josh Brown, rightfully so, said, you know what? I'll take the praise, but Matterport, he goes, well, it's up 77% this quarter. I'm down 80% in my thing. And I want to show you this because when you go into this stock and you look at a weekly, it is upper left to bottom right. It is up this quarter. That's April 22nd. We had a nice bounce up here. And it's based on the Matterport being bought. Okay? You can't count on that type of thing. Josh Brown says it's by far his worst trade in his career. And it's just, it has exploded. That pop right there in volume. He says he's waiting for the thing to go about. But he said it. He said, hey, you can tap me on the back and say it's up 77% in the quarter, but it's not one that I'm proud of. And that's the key. Time matters. So don't get into these things thinking that, oh my God, you're going to get into this. Now, one of his recent ones, which is down 18% in the quarter, is Samsara. IoT, this is the Internet of Things. I mean, this is a company that has just changed their name so many times. And he bought it just a little bit a while ago. But you can see this is bottom left to upper right. Now, it's pulled back a little bit because it has been on this crazy run. But I'll put, Warner Brothers is one of his. Shark Ninja is one of his. This one's an interesting one because, again, if you bought it down here at 29, just 10 days ago, you're filling a gap. You're filling the gap up to 34.17, and then you're hitting the 200-day as your resistance. But your 50-day is starting to move positive. Your 9 and 21 have already moved positive, but your RSI is a little high. So, again, timing matters. I thought it was interesting. I wanted to bring it up. This particular Instagram right here, I will put it. It's Morning Brew and Max Income, Mike's MB, whatever it is. This outlines exactly why I hate airlines. Airlines. I shouldn't say hairlines. Airlines. Okay? This is about love. Southwest. And what this person maintains is that you could take every plane in Southwest's inventory right now. And for just the basic of selling a used plane, you could sell those planes for $18 billion. $18 billion. If we go over to Seeking Alpha and we look look at love, the market cap of well, let's see. I want to see maybe the market cap of 18 billion is I think that's the market cap of something. Let me see. They don't go over it. Watch this one. But essentially, yeah, market cap is 17 billion. So you could take the planes, and by the way, the 17 billion doesn't include all the machinery equipment, doesn't include that you could sell off, doesn't include the computers, that all of the other capital stuff that you could sell off, doesn't include the employees that you have, doesn't include, the manpower, all of that stuff. He makes the argument that you can sell their planes alone for $18 billion and they have a market cap of $17 billion. So you could take over the company and then just start shelling it out and sell it in pieces and make more money than you've actually paid for the entire business. That's why I hate airlines. Again, it's not a good business to be in. It's capital intensive. And so they make that point. Watch that. It's a great one. This is interesting. Top 5 mining stocks. That's just an interesting one. If you don't, maybe you don't want big cap tech. I don't know why you're listening to me if you don't want big cap tech, but maybe you want mining stocks. Steve Kress, who's in charge of the quant team, and he built the quant in Seeking Alpha. He says, hey, here's the top mining stocks. So if you like that, go and look at it. Now let's talk about Nike. Yesterday they released earnings. It was a shit show. I mean, it was just they basically said, hey, yeah, we beat earnings per share, but we didn't beat on revenue, and we see some weakness. I talk about it all the time. You need a good company with good earnings, with good product, with good management. This is bad management. 100% this is bad management. When you see a drop like this, it's bad management. You're down at 77. I want to read you an email that I got yesterday from Jim. Hey, Gary, I listen to your podcast on the morning commute into the office. I'm a huge fan and really enjoy your content. You provided some really good insights on Nike this morning, and I just had to buy some puts prior to close. I snagged some of the Nike $84, 628 puts, and we'll sell them in the AM. Thanks for the insights. As of now, it looks like these contracts will pay out a nice premium, but anything can happen in the market regardless. They're paying out killer. I mean, I don't know anything about options. Jim, I commend you. And by the way, my Venmo and everything is available for you to send me a nice gift. But my guess is that you probably didn't put. If you're buying puts that expire on 6/28, meaning today, and you're buying them yesterday, that is true degenerate behavior, and that I commend you on. High five. This is why I got into this business, so that you guys can do this degenerate behavior, and then you can tell me how much money you made. Because honestly, and I said this on yesterday, my theory on this is my benefit is you guys making money. I'm like a bartender. If you make money, I accept the Venmo. I accept the Cash App. I accept the PayPal. I don't anticipate it. Knowing that people make money off of my insight is what I like. I don't make as much money as I used to because I do this podcast in the morning, and the mornings is usually when I would trade. So it's a little bit hard. But again, Jim, kudos to you, man. That's just a great play. And it goes to show you don't have to follow my advice. I always look at the stock. I always look at that. But there are quite a few people who make money off of options with me. I don't understand options. I don't suggest you trade options. They're confusing as F to me. I don't get it. But hey, have at it. True degenerates, unite. We ride on at dawn. But that Nike, just a horrible quarter. If you own this stock, my apologies. I don't think that they come back anytime soon. China is weak. I mean, look at that candle. That weekly candle right there. But I'll definitely be adding to this position. It was in a retirement account, so I can get out with a small loss and get back in. That was written back in July, okay? That was written back, in January. Because I bought at like 121, I think, right before the earnings here in December. And I still hold it. But it's like $1,000. I'm not going bankrupt on this one. I think I still actually hold it in Savvy Trader. So it's not, it wasn't a huge bet. I was betting against earnings, and I've had plenty of time to get out. But I always thought, hey, Nike, solid brand, solid management. The management sucks. Management just sucks. Get out while you can. Social requests. One I'm curious to get your take on is CAT. It's been sinking lately and seemed to come back, but with Deere and others laying off, not for sure if I should have put more into it. And so Jacob is asking, I think he asked on Facebook, CAT. So CAT is one I held. I got out of CAT. And it was close to the high. I just got lucky. Honest to God, I just got lucky. The algorithm makes you 79% versus making 72% buy and hold. And so while I think that the algorithm works over 24 months, this is an industrial stock. And remember, industrials shouldn't trade like this. But here's what you're seeing. Now, what I would really look at on this weekly chart is where was this prior to the pandemic? And you're looking at it, and it's a $146 stock. Has Caterpillar gotten that much better than they were in 2020 to actually justify doubling? And if we go over here and we look at CAT, I just want to look at CAT from a quant standpoint, because I don't know the basics of it. The market cap, 160 billion. It's big cap. The valuation, C-. Growth is a C-. And that's where you're probably looking at the problem. Is you're growing at 8%. Your revenue growth forward is expected to be 4%. So there's better places to put your money out there in this industry as far as construction and heavy equipment. That's it. And the profitability, they're doing great as far as profitability goes, but they're projecting that they're going to slow down. And that's the problem. When you look at the Wall Street analysts, they're saying that the actual price target is 347. Take that with a grain of salt, because every time that you've gotten under this, The price target was kind of pulled back. See how it bumps right up against there for a couple of years? I just, look at this. CAT over 5 years, you're at the lowest analyst rating. I mean, that's the lowest analyst rating. You look at it and their revisions, how are analysts rating it now? 20 are saying up on the earnings per share, 2 are saying down. 2 are saying down, up on revenue, 16 down. So while you care about the earnings per share, that revenue growth is going to be an issue. If they are only growing at 4.91%, as far as the chart goes, you've got more downside. Where would I see the downside coming? I would see this resistance right here at about, we'll say 290 or so, 293. That looks like a good resistance because what do you have? You have this little downturn right here in last year. It was from August to October. You have that downturn, okay? It hit that point. Then it came back up here. And for a couple of weeks, you used that 293 as resistance. Then you just shot up. And so where do I think it might come back to? I think that's where you would come back to. Your MACD still up high. Your RSI is in no man's land at 52. It's not like it's incredibly oversold. When you go to the 4 hour and you look at this thing, the algorithm has you in here at 302. Or I'm sorry, 330. I would say you've traded sideways since then. You can see the 293 being a resistance level back here in December as well. And it's for a short period of time. When you use the trend spider and you put in that resistance level for yourself and you do it across all time frames, it's going to keep it. And you just had the death cross here. And I would say this 330, it wasn't a strong buy. You never gained confirmation. You gained confirmation when you got from 319 up to 329, but you quickly lost it. Now you're starting to gain it back here today. You're up 1.48. The MACD is below the oscillator. For quite a few days here in the beginning of June, it was oversold, but it traded sideways. I would argue you have more downside. Jacob, I would say to you, there are better places in this market to grow your money. We're in an AI and a GLP-1 market. Does CAT fit that kind of, that characteristic? I don't think so. So in my mind, I think there's better places. But again, Jacob, that is just my opinion. This one could easily just, rocket back to 377 if, for some reason, the management comes out and says, you know what? China's opening up. I don't think they're going to do that. You know what? We got to rebuild, We're going to rebuild Ukraine peace. We're going to sell a bunch of tractors into Ukraine to start milling their soil again. It could say crap like that. Jacob from Spotify, different Jacob. Gary, thanks a ton for your podcast. I listen to it every day, brutally honest. Can you check out Netflix? So I've said Netflix was a buy and it's going to 700 for quite a while now. Jacob, to be honest with you. So did I buy at 549? Absolutely, I bought at 549. I've been adding to this name. This is one that I just added to. Now you've got to make the determination at 682. Do you want to just ride it to 700? It is extended. I mean, even on the 4 hour, it's extended. When you go to the weekly, it's even more extended. We had the golden cross here of the 50-day over the 200-day. That's a great thing. And it's continued higher. You had a couple of weeks where you pulled back and you could have bought it. I brought it up back here in April of 2024. I said, hey, this one at 500, it's an actual, it's just a great name. We can go over here and look at Netflix. The valuation, crazy. Valuation is nuts. Growth, fantastic. This is the only streamer that's making money. The valuation, it's an F. From the PE, it's 47. It's 288% above the other stocks. It's 7 out of 35 is ranked. When you look at the PEG, even their growth rate is crazy, but it's going back to 700. When we look at the Wall Street price target, it's 647. That's a 5% downside. But I argue it's going to 700. Will it hit that 700? At some point in time, it will. But remember, they are spending a tremendous amount of money. Now, what you're going to see is that quarterback, series that comes out during NFL time. They're going to be clamoring to sign up people around that quarterback thing. They're clamoring to try and get NFL live games. The NFL just has to pay, $4 billion in a lawsuit. But this is an interesting one. I mean, I don't think I'm adding here at 682 because the top side for me is 700. At 500, absolutely I'm adding because I think the top side is 700. Until we get over that, and this was way back in February where I said here at 600, I said you got 20% upside on this. So again, do you have to listen to me every day? No, but you can read this in the newsletter. The newsletter every day is a 5-minute read. And so you just scroll through it. And if there's names in there that you want, then you can get them. I post charts. If there's any questions that you have on stuff, Jacob, I would say this one probably is just a hold at 682. I don't necessarily think you should buy it. I'd rather see you buy it at 700 when it's using that as support than using 700, buying at 680 and thinking 700 is the resistance. That's just my thought. But it is, make no mistake about it. It is the valuation that's the problem. It's nothing else. When you look at everything, revisions, 39 earnings per share up, 0 down. Revisions on revenue, 24 up, 16 down. The revenues are going to be an issue, but I don't think people are getting rid of their freaking Netflix. I think they're getting rid of their cable. I think they're they're trimming their cell phone. If you're paying more than $50 a month for your cell phone service, you're out of your freaking mind. Go over to, Visible. It's $25 a month. You click on this link. Here, I'll show you right now. We'll go to Visible. You click on this. I save you $20 a month off your first month. And let's check out the plans because there's only 2 plans. There's $20 and then there's $45. Now, your first month, use code VIP20 and you can get it for $25 a month. But you get $20 off your first month from using my thing. New members, $20 off your first month. A Visible Plus, use VIP. You can get $20 off this Visible, I think. It just says $20. I don't exactly know what it is, but go and sign up. Again, if you're paying more for that and you're cutting, say you want to cut out your $15 a month Netflix. They have an ad buy. By the way, the ad tier is actually making them more money. They're probably going to raise the rate of the ad-free tier because their ad tier is making them more money. So, yeah. I brought up, by the way, to Jim, my response to him when he said puts. I said it was an absolute shit show of a earnings call. The management team has no clue what's going on. China is weak. They don't see demand. There's a major soccer league tournament going on called Copa America, and the Olympics are coming up, and they are major sponsors of both, and they see lower demand? What a shit show. Una, thank you so much for covering my request, Gary. They were super helpful. That's why I'm here. Again, I'm no Jim Cramer, but that's why I'm here. Let's look at some scans. One that I think a lot of people are into because I tried to get them into it because I do think it's an $80 stock. I think that the resistance level is about 70 right now, but we're looking at this gap. This gap fill up to 76. We're looking at it. Once you get up to that 80 level, you can trim it if you want, but Shopify. Now, you don't see an entry here. The reason you don't see an entry is because the entry was here at 58. Okay, that was back in May. And I said, hey, you want to get in at 58 because we've got a gap above. You don't have any confirmation. I said, wait. And you could have gotten in at 57. You could have gotten in. But once we got the confirmation and you were back up at 60, I added at 60. It wasn't much, a couple shares. I have way more at 70 and 80, because I bought on the way down. But I do believe that this stock is an $80 stock, and I think that provides resistance level right there. And I think they'll kill it. I think, again, this is a company that got rid of all their costs, just like Amazon did, and they'll actually kill it. They just didn't talk enough about the AI stuff. Anybody with Shopify as a small business knows it's a great, great company. So Shopify is one. Mara got a cross up and an entry. This is Bitcoin. This is a Bitcoin miner. Now, we had the halving. The halving cut their mining stuff in half, and ever since then, we've been trading sideways. Do you want to buy here at 20? I would argue we're going back up to 25. I would argue that we're going back up to 25 on a hype rally. That's it. But Mara, we had a bunch of stuff that crossed up. AMD crossed up. And some of the Bitcoin ETFs, you can tune into the newsletters, see all the Bitcoin ETFs that crossed up that show. But AMD, we've been trading sideways. This is a stock that can't get out of its own way. It's the valuation. It's the fact that NVIDIA will absolutely own the AI trade for the next 2-3 years. They are so far ahead of AMD. They are so far ahead of Intel. They are so far ahead of Qualcomm. Qualcomm is the only one that's even trying to keep up, and that one is up 3% today. But AMD has a cross up here. 159 is the entry. I would argue anything under 160 is a great buy. At 163, I think you're coming to fill this gap at 187. But again, you have a sideways trading 50-day. You have a sideways trading 200-day. So is the direction clear? No. I just buy and hold this one. This is one that, again, if you don't want to buy this particular stock, get SOXX. We can look at SOXX in the chart here. SOXX is the ETF that we looked at earlier. That is beating Amazon. That is beating Microsoft. That is beating Meta on a 5-year chart. Algorithm just got you out. Just got you out with a 17% gain. The algorithm makes you 100% over 2 years in this. 23 positions over 24 months. The algorithm, again, it got you out, doesn't have you back in. It will get you back in the next couple of candles. So AMD, big part of this ETF. So I like it. As far as Bitcoin goes, I got an alert yesterday. One of the great things about TrendSpider is I set up these alerts. You can see it behind my head is a panel where I've got my alerts. MicroStrategy is one. This is basically a triple levered ETF on Bitcoin. All this dude does is buy Bitcoin. He issues more stock and then just buys Bitcoin. And so as Bitcoin just continues up, this thing just soars. The algorithm makes you 986% over 24 months. That is 10 times in your money. So yeah, say you put $1,000 and you just traded it over 24 months with 23 positions in the algorithm, your average win is 41%. Doesn't mean you're going to get 41% each time. Look at this one. I mean, this one, January 25th, 461, it got you in. It got you out at 1649. That's a 240% gain. Say you put $1,000 in there right there, that's $2,400. Again, $1,000 turned into $2,400. The algorithm's really good with this one. Is it going to absolutely make you money? No, you win 52% of the time. So 48% of the time you lose. But the algorithm gets you in. Remember, there are sales going on where you get the algorithm. You can get the algorithm for $50 a month. I would argue at 52, just do this one. But if you want the advanced for the unlimited one-on-one training, that's a great one too. But again, MicroStrategy is one that performs really well. We got some levered ETF. We got some covered call ETFs. ALF, ANET, which is one that I've been looking at to buy. Arista Networks. This is one that hasn't even pulled back. I mean, ever since we've gotten this breakout, this buy-in at 302, we got another one probably going higher. It's an all-time higher. We talk about on a weekly, you want to see a bottom left, upper right stock. This is your category leader. This is just an unbelievable one. Now, if you go over here to Seeking Alpha, and this is why I have all these tools. I'm showing you exactly what you would do if you had these tools. ANET right here, valuation is D. But the valuation is a D, not because it's, it's just a high PE. When you go to the PEG, it's, they're growing fine. That when you go to Wall Street and you look at the price target, 7% down at 327. Do you want to buy it? This is a trade at this price. I would argue it's a trade at this price. It's not a long-term investment because you want to wait until this one pulls back. 353 is your 52-week high. You're at 352. That's an all-time high at 353. So this Arista Network rises the Citi boost price target citing rising AI opportunity. This one got a cross up. Let's see the price target from these guys. Let's see, 385 from 330. That's the most recent one. 385, you're trading at 352. That's what, 10% if they think it's going up there. But again, the newsletter, completely free. Feel free to sign up. You'll see all of those scans. Now, as far as getting any of these tools, TrendSpider, we talked about it. It's going on a sale. Seeking Alpha Premium, you get a free 7-day trial. You can see all the quant ratings of all your stocks. You can see everything that you need to have. That is 20% off, free 7-day trial. Alpha Picks. There's one coming up next week on the 1st. Next week on the 1st, we get a new Alpha Pick. This is a curated portfolio, data-driven stocks, 2 per month, once on the 15th, once on the 1st. They alert you when to sell. That's the difference between this and Motley Fool. Motley Fool doesn't tell you when to sell. They've got a portfolio of like 700 stocks that my dad's subscribed to. This one, it's about 30 stocks, but they tell you when to sell. The stock picks are over multiple sectors. I'm not supposed to say this, but Bluebird, the freaking bus company, was their last one. Access to alpha picks on one day. You get all of the analysis. Do not misinterpret this. This is just access to the portfolio and all of the analysis in the portfolio. Seeking Alpha Premium gets you the quant rating for every stock that they cover. That's thousands of stocks. Thousands of stocks. But Alpha Picks is just this one area that you get within Seeking Alpha. Both subscriptions need to be subscribed to separately. You need to go and click on one and then click on the other in order to subscribe to both. But Alpha Picks, I would argue, the difference is if you want to do your own research, get Seeking Alpha Premium. If you want just 2 data-driven stocks per month and you want to beat the S&P, because if you've got a big enough portfolio and you buy these stocks and you buy them in the portfolio percentage that they tell you to buy them in, then you're beating the S&P. So the $449 that you pay for the Seeking Alpha Premium, you're getting it, you're going to get your money back. That's essentially what it's telling you. And they can't guarantee future performance, but it's been so good. It's been so good. Okay, that's it. 51 minutes. Not bad. Thank you, everyone, again, for making me a top podcast. I'm extremely humble about it. Please share the podcast. Share the newsletter. Continue to help it grow, because if it helps you, it probably will help others. And remember, sign up for TrendSpider as soon as you can, because these they're telling me, let's see, early bird, early bird is gonna be bumped out today. Yeah, early bird bonus discounts. So sign up today. Anything else that you need? Take care. I'll see you on Monday. Bye. Trimmed in. I got to go back and read this. Morning, Steph. Morning, Brandon. If you can find the T, you would beat Biden. I could definitely beat Biden today, and I haven't played in a year. Thank you, Scott. Thank you, Raj. The Seeking Alpha video was good. And Penny has finally calmed down. She found a turtle this morning, Scott. She's out of control. SOX is my primary significant. SOXS has just been good. I mean, doing that chart today just taught me SOXS is a great one. Buy it on the algorithm. That's what I would do. Tesla time. Is Tesla up? Yeah, Tesla's over 200. So Tesla's on watch now. Tesla's on watch as using, and I'm slightly concerned about it, to be honest with you, because that 198 was resistance. I don't have enough time before they deliver their delivery announcement to actually assume that this is going to be support. So my assumption is when that delivery announcement comes, if it's not good, you're back down to 180s. So it might be time to actually trim this one in my parents' account. Apple's good. Amazon is better, I think. I think Amazon in the short term is going to provide you more upside. But Amazon's having trouble, by the way, breaking over 200. So it's a little bit. Would SMH be a better investment than SOXS? Let's see. I think that's because I think SMH, I don't think you're wrong with anything, but I think the holdings is where the difference is. If you go to the holdings, I think the percentage of NVIDIA, yeah. See, SMH has NVIDIA at 20% and TSM as 12%. So it really depends on which one you want in your portfolio, because the holdings here are different. And the charting wise, I mean, you can't determine, let's see, we're going to do profitability. No, performance. We'll do total return and then select symbols, SMH. It's the holdings, and it really. If I were looking at this, And I would look at 5 year. The reason is because NVIDIA is a bigger portion of SMH. So if I were concerned about NVIDIA tanking, I would probably buy SOXX because it's probably going. You can see before NVIDIA broke out, these were kind of performing about the same. So once NVIDIA really started to break out, that's when SMH really took off there. If you want more exposure, I would say, yeah. Broadcom and Tesla killing it. Broadcom actually has had a pullback. Did they start going up now? Yeah, Broadcom's back up. This one, by the way, Broadcom, don't fall asleep on this one. This one's an NVIDIA. The valuation's a little bit nuts, but you're going to go back up to this. We got out yesterday with a 10% gain. I probably should have sold it yesterday, but you're going to get back in. I mean, at 10 for 1 stock split, you're going to get back in. And let's see. Okay, so what I typically do during the day is I look at the index, and I track the QQQ. So my portfolio should track against the QQQ. And so what I'll do is I'll pull up my Fidelity app, and I will look at the percentage gain of my entire portfolio. Today it's 0.46. Okay, I'm way up in my Roth, up 1.2. My individual account, which typically is run by Apple, that's my brokerage account. That's up 0.5. So I'm all over the place on this. But the index is up 0.15. So that tells me I'm doing significantly better, 5 times better than the index. And so I'm okay with that. Now, I've got a lot of catching up to do with that QQQ index because Apple has dragged me down. Apple has come back up. Still, year to date, it is lagging behind QQQ. I mean, we can go and look at that. If you just go QQQ. Oh, I've got to. Let me home. And I'm going to refresh. Let's see if I can go QQQ. And then we'll go back to the chart. Let's hope it doesn't say. Do I have to open up? Yeah, there we go. Okay, so we'll select symbols because we don't have a, and we have, I mean, I'm not going to worry about the small dividend, but year to date, look at QQQ, 17% versus 11%. 1 year, 32% versus 13%. So I'm lagging in my portfolio significantly because of that. Hey, D-Man, did you hold on to Wolf? I ain't calling you out, Brandon. Brandon, you know my degenerate behavior. I'm a fan of everyone else's degenerate behavior. I just don't want to... my own degenerate behavior. I've gotten out of I'm too old for degenerate behavior. I was telling my dad that. Monster at 50. Algorithm had you in at 42. Yeah, I would argue, D-Man, you're probably right on this one. Although you've got this nice bounce here at 47 at about... So if you look at this, and this is on the weekly, take a look at this. The high here, 49.50, and then you've got these 2 bounces where it kind of came back up and using that 200-day. I know, D-Man. I said at the beginning, that fucking dude, man, he said... And he was crowing about it yesterday. I told people to buy. I'm telling them to sell now. Douche. But even if you bring this back to here, I mean, this is monster. That's a clear resistance level that's now turning to support. I mean, that's pretty clear to me that that's turning into support. You've broken down a little bit. And I would say that 46, if we just, let's pull this. Let's do this. Because if that's the last time it used it as resistance here in April 2021, let's see. You've got this volume kind of profile here down to 47. And yeah, I mean, even the volume profile is saying, hey, we're probably coming back up here to 54 on Monster. So this is the weekly, and I don't see that the MACD has turned around completely, but that RSI coming off of 31 up to 33, you may see a bounce in this one. Again, I'm not going to bring it up because I hate these drinks. I mean, when people ask me about Celsius, I bring it up. I do think that CELH, it got a bounce yesterday, I believe. It's down slightly today. But let's see. Yesterday's candles, I think, were up. Yeah, you've had a bounce right off that 51. I mean, could I call it 52.26? Could I call it any better? That was the ultimate support down there. And the MACD is kind of turning around, the RSI turning up a little bit. You still don't have confirmation, so I still wouldn't add to it. But the algorithm got you in at 63. Still hasn't gotten you out, though. So it's interesting. I mean, that's a good one. But let me see. I got to check. I thought I'd be up more than this. But I tell you what, I'm pretty happy. I made more money following Gallagher's advice than I made my life. Can't endorse enough. Scott, that's all. I mean, again, you're welcome. Scott, I'm happy to do this. I mean, that's exactly why I do this. Is I geek out on this stuff. B, I'd be doing this for myself anyway. And that was just to give you guys a background. That was why I started the entire podcast. And the podcast is way more popular than the newsletter. I started the podcast in 2020, I believe. And I didn't do it every day. If you go back to the first episodes, you'll freaking cringe. It was horrible. But I said, hey, I think this one's good. I think this one's good. And I was using charts. I didn't have the 4-hour algorithm yet when I first started, but we were starting to get into that. And I said, this one's good. And we started to get into it. Me and my buddy Steve, who were trading in 2020, and we were pushing, towards kind of using charts a little bit more than fundamentals, because we had both been fundamental guys who just started getting into charts. I knew about candlesticks. I never really used them. And then as we started to go through, we lost a bunch of money on oil. And I think even those first couple of podcasts, they were, hey, I'm losing on oil. Oil can't go negative. And then boom, oil goes negative. So I quit. I think I quit for like 4 months. That's when I developed the algorithm with Steve. And that's when he and I worked on everything that we worked on so hard to try and make sure that we weren't going to lose the tremendous amount of money that we did. Now, I lost a tremendous amount of money in 2022, but I held on to those stocks and I just added. And it was, I believe in this. We're just at a bad time. I'm going to add to it. And the trades didn't work out until 2023. Now in 2024, they're all perfect because they're up. I got out of my losers, Baba. I wound up losing money on. I got Etsy. There's been a bunch of mistakes that I make, but overall, I'm doing well. You can win 20% of the time as long as the size of those wins outweighs the size of the losers, the 80% that you lost. The amount of wins that you get doesn't matter. It's just a matter of making sure that you're adding to your winners and you're cutting your losers. And if your losers are small and you believe in it, just make sure. It's like Intel. I bought Intel at like 44. I think it went to 48, and I could have taken a 10% profit. I cut half of it at 31 or 32, and we're at 30. So I still own half of it. I've cut it, but I don't want to cut it completely. I think that it's possible that it's bounced, but the valuation is just crazy. And at some point when I need the cash, I'm just going to go in there and pull that out. Ever heard of FREC investing? No. What is FRC? FREC. No. Index investing that gets you more. Huh. Oh, pricing. Let's see. Hey, that's not bad. Interesting. Never heard of it. But it does, that's kind of like those sponsors, those funded trades that Matt Trades does. Yeah. Took my gain and added to B. Yeah, Intel better be a long trade. I mean, this is the thing with the valuation of Intel. This could be a very long trade. I mean, let's be honest. This could be a 10 to 15 year trade. Just because of the valuation. The growth is horrible. The momentum's horrible. The revisions are horrible. The profitability is an A+. They still make 41%. But again, you go and you look at NVIDIA that's making like 70%. So it's hard. Let me see. Do they have a? Let's see. FREC affiliate. Florida Real Estate School. They don't have an affiliate program. It doesn't look like it. Investing. Meet the team. You got a big team. Mo. Huh. I can message them and ask them if they're interested in telling me more about them and I want to become an affiliate. I can. I typically don't reach out to people. They reach out to me. There's an app. I should put it up. They want to pay me $4. They would have, yeah. My friend who pays for Spotify, I'm gonna send her $100. Oh, I think I can pay. Can I pay through Apple? I don't know. Maybe I can. Yeah, D-man. The consumer's weak. The consumer's, I mean, and I don't think we're in a retail recession. I would argue that it's a specific retail recession. It's not an overall retail recession because when you look at Dick's Sporting Goods, that's not a retail recession. When you look at, what's another, let's see, Dick's. Let's look at similar ones. Specialty retail. Let's look at Warby Parker, WRBY. Because it's not this is where Seeking Alpha probably comes into play. It's not an overall retail recession because you're seeing short term. This one makes you a lot of money. Let's say Hibit, which is Signet, BBWI. That's an that's where you just put your money. That's a Bath and Body Works. Ooh, that's a tough chart, man. D-man, is this? Let me see. Didn't you say you put your money into BBWY, D-Man? I'm looking for the... Add it to BBB. Yeah, you did. Oh, that's a tough chart to add to. I got to be honest with you. That's a tough chart to add to. But you look, their number, I mean, they have a good quant rating. It's a buy. It's not a strong buy, but it's a buy. You're on the downside of your 52-week range, your day range, you're up. The valuation growth and momentum kind of suck. I'd be worried that it's going back to hold. Revisions, let's see. 10 up, 6 down, 10 up, 8 down. It's not great. I'd worry about that one, but I know you know what you're doing. You're fine. I would wait. Candles, I know it's because of your girlfriend. Your girlfriend with candles. I think that's what you told me. I think that was the message that you sent to me. Let me see. Bark. Tractor Supply. I think Tractor Supply was doing. Let's see. Performance. This is the 28 specialty stores. So if you look at the performance, Bark is up 30% in a week. Chewy up 13% in a week. These on a weekly basis, they're pretty harsh. So restaurants like Darden, DRI, I think they're getting hurt a little bit. Let's look at what I like doing is going over into the industry of restaurant stocks. And then you look at the performance, not just the thing, and you look at 1 week performance. And Dutch Brothers up 10%. What's this one? PB. I don't even know what that is. Wingstop's up 11% in a month. These are kind of interesting ones to look at. Haktua. Got to spit on that thing. They have bug repellent now. I don't like that. I don't like that chart. Bank of America's up 1%. I mean, Bank of America is banging up against that $40 mark. I want to add more banks. Yeah, I've come down. I mean, the market has come down. Apple has come down a little bit. I'm only up 0.32 today. Market's still up 0.15. So, the Qs. So it's Apple that's coming down. It's only up 0.36. But that drives my portfolio. This drives my entire portfolio. Okay, it's 10:30. I am out of here. You guys have a good weekend. I will talk to you